Hello traders, welcome to this video. In this particular video, we are going to be discussing the 9 EMA strategy, the 9-day period exponential moving average strategy. So first of all, we are going to be setting up the 9 EMA on our chart. Go to insert indicators, moving average. This period, you set it to 9. The EMA method, you set it to exponential. You can choose whatever color that you want, and then you can choose the thickness of the line that you want, and then you click on OK. Right? So this is our 9 EMA on our chart. Now, the exponential moving average, basically the moving average, irrespective of the period, is a trend following indicator. It's an indicator that lets you know the direction of the trend. So now coming down to the 9 EMA, the 9-day period EMA strategy is a trend following strategy because it is a moving average strategy, right? Now because it is 9-day period, so it responds to price changes faster compared to higher moving averages like 50, 100 and above. So the smaller the period for the moving average, the faster it is to respond to price changes, as we can see here. So if you want to use the 9 EMA for your trades, you might be wondering, how do you identify buy opportunities? How do you identify sell opportunities? Do not worry, we are going to discuss that in this video. So basically, whenever the price of the assets is trading above the 9 EMA, it is an indication of a buy signal. Whenever the price of the assets cuts above the EMA, as we can see here, this was a buy signal. At this point, we could have considered entering a buy trade and then setting stop loss right below the support level. Right below the support level, we could have set our stop loss somewhere around here, and then our take profit using the EMA as our exit signal. We could have considered exiting the trade right when the price dropped below the EMA. So we would have entered around here and exited somewhere around here, which would have cost us about 250 pips, right? Now, you can also use other indicators as extra confirmation for your signals, whether buy signals or sell signals or your entry points or exit points. You can also use other indicators for that. Now, looking at a sell example is just the reverse of a buy, right? Whenever the price of the asset falls below the EMA, it is a sell signal. Whenever it falls below the EMA, it is a sell signal, right? And then we can consider setting stop loss right above the resistance level, as in this case, somewhere around here, right? And then as for the take profit, we can consider the nearest support level, or we can just wait for an opposing signal from the 9 EMA. So if we had entered around here and then exited right after price cut above the EMA, we would have caught about 8 to 7 pips, right? So basically that is how to identify buy and sell signals. But note that you can also use trend lines in addition to the signals given by the 9 EMA. For example, let us just set a trend line here. Remember that the trend line works after 2 points. You use 2 points to gauge the direction, right? So we have 1, 2, and then we draw the trend line. Okay, so now at this point, let us use this point as an example, because these are the 2 points we use to draw the trend line. Let us use this point as an example, right? Now, after the price of the asset hit the trend line, it started moving upwards. Now, because the moving average is slower than price action, of course, it is an indicator, so it is slower than price action. It moves depending on the movement of price action. So the indicator follows price action, right? So you will be expecting the price to hit the trend line first before it crosses over the EMA. So now, having crossed over the EMA, we could have used the trend line as additional confirmation because it has already bounced off the trend line. Then we can consider this an additional confirmation. It has crossed over the EMA, but because it had bounced off the trend line, then we can consider that an additional confirmation to enter our buy trade somewhere around here. And then if we had entered this trade, for example, we could have set our stop loss below the swing low or below the support, like I already said. And then now that price had cut below here, we could have considered exiting. We would have exited the trade. Perhaps we wouldn't have made much, perhaps just 4 pips, right? Or 4 to 5 pips after exiting here. Then once the price cut above the EMA again, what we would have done was to now wait for an additional confirmation from the trend line. That is, if you are using trend line for additional confirmation, we would have waited for an additional confirmation from the trend line. As we can see that when the price got to the trend line, it formed a doji. Remember, we have talked about doji in one of our previous videos. This is a standard doji. And remember that a doji represents a bullish continuation in a bullish move. But if it is found at the end of a bearish move, then it means a bullish reversal. But in this case, because it is a bullish move, then we can see that it's indicating a bullish continuation. So like we have about 3 signals telling us the same thing. The moving average, price cutting above it, is one. The doji forming in the midst of a bullish trend is the second, indicating a bullish reverse, a bullish continuation. And then the price bouncing off after forming this doji. You can see that this candle was within the trend line. So price bouncing off the trend line being the third confirmation or the third signal, which we now use to confirm our buy entry. So perhaps we would have entered a buy trade around here, and then we could have considered exiting right after price dipped below the moving average. So that would have cost us about 140 pips. So guys, this is basically how the moving average works. Whenever price is trading above the moving average, it is showing a buy trend. On the other hand, whenever price is trading below the 9 EMA, it is showing a sell trend. And remember that you can always use other indicators for additional confirmation of your entry, your exit, your stop loss, and take profits. You can also use trend lines and price action. So guys, I hope you found this video insightful. Kindly like, subscribe, and share to those who you think might also find this video insightful. And don't forget to hit the notification bell for more updates. Cheers guys, and happy trading.